Hello traders, this is Day Trader Matt with a businesswithtrading.com doing an E-mini trading room recap for Wednesday the 13th of February. And today we had the markets gap up a little bit, only to chop quite a bit and then to begin running lower. Today we had 3 trades and we were 1 for 2 on the day. Actual entries and exits, we lost 5.5 points or 22 ticks. Our first trade happened pretty early in the market. We grabbed a long. It looked like price was beginning to move higher, and it just rolled over and stopped us out. And then we got long over in this area, and price came down and stopped us out pretty quickly. And we watched price come down a little more, and then we got long up in this area and took a little profits into the end of the room. So we made a little bit back, and I guess it could have been a worse day. 5.5 points is definitely manageable. It's something you can definitely come back from, and as long as it's not a habit, and consistently we're pretty good, pretty well profitable in the room. And 5.5 points is something you just have to step back and say, my analysis was wrong, because obviously my analysis was wrong. And just change your paradigm a little bit and look at it through a different perspective. And that's really what trading is all about. You have to keep in tune with the markets, and when you're out of tune, you want to relax and take a step back and then reevaluate. And that's exactly what I'm going to do. And showing the losses, showing gains is all well and good, but unless you are able to show the losses during the day, I don't think it really amounts to anything. And for me, taking a loss is actually a good thing. It's not good losing money, but actually taking a loss means that I am human. I can't make money every single day, and it kind of brings you back down into reality, and makes you have to reevaluate what you're doing. And it's pretty good on a day like today. And the month of February hasn't really been the best ever. And last year's February was not very good either. I don't know, maybe I'm kind of getting jinxed in February, I don't know. But anyway, we'll see what happens and go from there. And that's one of the reasons I try to use like tighter stops, just in if a day like this happens. If you didn't have stops, let's say you were long up here, you didn't have stops. The market's all the way down here. That's quite a loss there. What are you gonna do? You could hold it. It comes back up here. You think it might go higher, and then it comes back down. Now the market's down here. What do? So that's one thing I wanted to talk about. If you're not using stops, and a lot of people talk to me, and some of them don't use stops, and I think it's very, very risky. Because some days you might not use a stop. The market will come down. Let's say the market kept going up here. You got long here. You did not have a stop. The market came down and then just took off, and you made a lot of money. And that just encourages, well, if I don't have a stop, I'm going to do better. And that mentality kind of sets in, and then one day you just blow your entire account up because you don't have a stop, and you were long here, and the market's down here. And I think that's a real important concept. Having stops is very, very important. Having a game plan every day and sticking to it, I think is very, very important. Because being a trader, you want to be here 5 years, 10 years, 20, 30 years from now. You want to be a successful trader, and adhering to rules that are unprofitable, like not having a stop. You might make money a couple days, but then you're going to lose more than you ever made because you didn't have a stop. and on a move like this, it can really, really hurt your account. So, wanted to talk about that a little bit. Thought it might help, especially with the emails I've been getting. So, hopefully, you got something out of what I'm talking about today. And with that, have an awesome day, and I'll see you back here in the markets. Thank you.